Yo, how you doing today?
Man, boy, it's been an interesting couple of days since the last episode got recorded.
My God, listen, it's
What day?
the market is a mess.
What day is it? What time is it?
Today, it's Tuesday, February 25th. It's late in the PST.
Yeah.
We've had a heck of a past 5 days of trading since you and I last spoke. Lots been going on. One of the things that I wanted to talk to you about, that I've been dying to talk to you about, is when we last spoke last week, you and I were talking about a trade of Celsius.
I believe
You had a lot of love for this stock.
I had a lot of love for Celsius.
And you were incredibly excited about it. And I don't know if I was happier than you were on Friday as you're texting me these exclamation points that this thing paid off, man. I'm just so, congratulations.
So for those of you who listened to our first episode, thank you. If you will recall, I was very bullish on Celsius. Now, the funny thing about that, and I have to laugh if you go back and listen to the episode, is I was totally shitting on Alana Nui.
Yeah.
Alana Nu, whatever it's called. I don't know. I'm like,
yeah.
And the reason why I was making fun of it was because it was painted as this existential threat to Celsius. I figured it was like the only thing that could screw up my Celsius trade would be the ongoing or continuation of success and market share for Alana Nu.
And the text you sent me was, it's Alana Nui.
They bought the fuck God. And as soon as it got announced, the stock, just dropped. I mean, it dropped from $25, and I think aftermarket, as the news came out, it dropped all the way down to like $21 or $22. And then as soon as people realized that they had just bought their main competitor, that's it. I mean, Monster's not competition, Rebel's not competition.
Sugar-free energy drinks.
That's it. When you go to Target and you look at an end cap, those are the two brands, and they just bought their competitor in a very savvy business deal. People looked at that, and I think I texted you, oh God, I think the initial text was, God damn it, they bought a lot of Nui.
That's what exactly it was. But then just watching what happened, man.
And then it just started absolutely ripping. It was gone. And it went from $25 to $35 within a matter of, an hour.
But this is all with the backdrop of a terrible market that's happening. Things that are dropping like a rock. There's no shelter anywhere. So this thing had remarkable momentum in a world where nothing was taking off. So it was a great trade.
Yeah. So Thursday afternoon when that got announced after hours, I think it closed at like 35. Right. So now we're up a lot. Friday morning, the market opened and it just absolutely ate its ass. And the whole market started tanking on Friday.
Yep.
And Celsius was strong. 32, 33, it's up, it's down, but it's not moving. And the irony here, and for listeners who listen to that first episode, is I broke Brewski's rule number 74, which is 30% profit.
30%. It's not that it was one. I thought it was like one or two.
It's deep.
It's high. It's
high.
Deep.
It reoccurs. It reoccurs. It's like
you pushed it further back for the sake of the profits that you made.
I'm trying to justify why I didn't take profit. Part of the problem now, that is an ideal setup. A lot of great trading is working that arbitrage between having a trade that's up and selling it when it's in the green.
Yep.
And then at the same time, having an opportunity to roll that money into a stock that's down.
So in the market was garbage.
It was so bad on Friday.
There was nowhere for you to park any money. There was cash and treasuries. There's nothing.
Yeah, cash is boring.
Yeah. What are you going to do?
So I didn't sell. I just held it because I thought, I think this can go higher. And in particular, I had calls, $30 calls expiring January 2026. And I wanted to sell those for $20 a piece.
Yep.
And that would have netted me, those calls alone would have netted me $80K. And I did, and I put the order in on the books, but it never hit. It was just shy. So I thought, I'll just wait.
Yeah.
I want that $80K. And it didn't hit. And then Monday, the market ate shit again.
Yep.
And it held. It didn't drop below 30. It was fine. It was steady. And today's Tuesday, and the market ate shit again. And finally, Celsius rolled over and it gave up like 12% today. So
with everything else.
Yeah, with everything else. It couldn't hold. I mean, there's not enough buyers at that point.
No.
3 days in, you just don't have enough buying pressure to sustain it. So, that's my bad.
No, but like,
it's my
look,
money
man,
to
just to
lose.
revisit for those that didn't listen on the first episode, just to recap really quickly, like the buying signals that you were getting out of Celsius early last week, and the people that you were talking to on Stock Twits that didn't believe you, that were betting against you, was hilarious. And boy, that you go on Stock Twits, you'll see them. They're there.
Yeah.
Like, as a reminder, what were the signals that you were getting, and why did you decide to buy this?
Early on, before the news even broke, I was seeing big options trades going through. Large block, both on the common market and in dark pool coming through, huge blocks. And we were talking millions of dollars of calls coming through saying, I think this is going to hit $24, $30, $34. I mean, just extravagant call options. And like we said in the first episode, for me, if I see someone willing to bet that much money, they either know something or they're a much better trader than I am. And I'm just a flea on the back of the horse. I'm going to ride that one out.
It was incredibly unusual because they didn't have earnings until March, but when those calls were starting to come in, and then magically they moved their earnings up.
And
somebody knew something.
And then, of course, all the short sellers were like, well, that doesn't mean anything. It's a fluke. It could be bad news that they're trying to get ahead of it. I'm like, nah, you guys are missing this. You're not looking at it correctly. And that's an instance where, as a trader, you have to, I think, follow your thesis, trust your instinct, and use a lot of common sense. Just a lot of Occam's razor. Hey, man, this seems like it's good. They've got a conference on Friday. They're moving earnings up to Thursday night. Why would you do that if your earnings are bad? You wouldn't. Occam's razor. Just trust it. I'll give you an analogy. I had a friend growing up, a good friend of mine. His name was also Ben. And him and I got into remote control car racing. And I don't know if you ever got into RC cars.
No, but I'm loving this already.
Okay, so there was this one RC car, the RC10. And on the box of the RC10, it had like these 4 Japanese dudes holding up trophies.
Oh, yeah.
They could not be beat.
No.
It had won more world championships than any car. And both my friend Ben and I said, you know what? F that. I'm not going to be one of these little RC10 bitches. I'm going to buy the off-brand. I'm going to go against the grain. And we never won a race. The RC10, you gotta commit and you gotta trust that. You know what I'm saying? Join the right team and you will win. And just stop trying to be cool. And so,
join the right team.
This was an RC10 trade. It was easy, man.
Yeah.
Like they were holding the trophy over their head already. All you had to do was buy the damn stock.
Well, and I think it just speaks to like right now, things are just such a mess. They're an absolute mess. We've got a lot going against us across the economy, across the market. And so when you see something that's really highly unusual, a bunch of call trades coming in on the options market that are very unusual, that have nothing to do with any type of news that's happening for that particular stock, there's something happening. There's something it's worth paying attention to. Like, you are a more savvy options trader. I don't trade options at all, really. I'm a more value long play, but I will find those moments. And in that particular instance, it's something where you and I both would have picked up on it. You saw it and said, man, there's something short term is going to happen. For me, when I see something like that, especially with a company like Celsius, I mean, it's a decently run business.
Yeah.
And you and I spoke about this last week. We see Celsius cans littering the streets. Like, we know that is incredibly popular, and the fact that it's a sugar-free energy drink, especially, like as people are minding what they're eating and drinking now in a much more profound way, it just makes sense as a company. So even if you're wrong on the trade, you're buying a part of a company that you believe in.
And here's what's crazy, Ben. And we talked about this before, but any money management, if you look at like someone who runs an endowment, and I have privy to some of this stuff, is what the expectations are. 7 to 14% would be like a banner year for these people. They'd be done. I bought that if I had YOLO'd my entire portfolio, into Celsius on Thursday, right?
Yeah.
I could have been done for the year on Friday. You know, like you go from $24, $25 to $35. I don't know what that percentage is, but that's you're done for the day. You're done for the year at that point. Or you've beat the market substantially. So it was a good trade, but then the question is, now what? And so that's what brings us to that was your question. So like it's a now what type situation, and you see the market continue to implode, and you have these huge macro issues.
And that's, I mean, it's we're in a rough spot right now. Oh, before we go to that though, we got to remind people or let people know for the first time.
Yeah.
If you want to talk to us, to all of our listeners, or to our one listener, how many of you are out there? We'd love to talk to you. We'd love to engage with you on stocks. We'd love to get your advice and go back and forth with you.
Yeah.
You are a bit of a legend on StockTwits.
I am just _Brewski, BREWSKI on StockTwits. I am not on X.
No, you were not on X.
I have been banned.
It's okay. Maybe Elon will let you back in. I am Make Money Ben on both StockTwits and on X.
Make Money Ben.
I've been on X for a long time. I still call it Twitter. It's still I will be tweeting as much. So get on there if you have questions for us. You do want to give us some advice. You want to give us some critiques. By all means, hit us up.
Yeah, tell us if we're doing a good job. We're doing a bad job. Do not Jim Cramer us and ask us to review a ticker portfolio that you love.
No, but we'll get to some that we like. Are the ones that we like, not the ones that you guys. I'm not going to do the research for you.
I don't care what you want.
So what we're talking about, like it is, like we mentioned, it's Tuesday. It's the 25th. Tomorrow's a big day. Tomorrow's an enormous day. The entire market.
Biggest day. I would say this is one of the biggest days of the year, if not of the last couple quarters, because of where we are market macro wise.
Look, we got Nvidia earnings tomorrow night, and it's going to happen after the bell.
Yeah.
The whole market has been in complete turmoil because of Nvidia, because of cheap Chinese AI coming out like a couple of months ago. And is Nvidia even necessary? Are all these chips that people are sitting on worthless because, or not worthless, but are as unneeded?
Right.
We're going to get a lot of information tomorrow night that's going to really make the market. But my question right now is, the market's been in such turmoil going into these earnings, thinking that they're not going to be the greatest, that this whole AI bubble that we're into has already started to deflate.
Right.
I don't even know if it's going to make as much of a difference. I don't know if we get like just moderate news out of it, maybe we even get a little bit of an increase. I feel like everybody's just waiting for Nvidia to say we're going bankrupt. Like it almost feels like that right now. The market feels so scared of this one moment.
Yeah, you have both sides, right? You have people going to the moon.
Yeah.
You always have those guys.
Yeah.
And then you have the short saying it's going to go bankrupt. And at this point, probably what would be most profitable for market makers would for it to open the following day like up or down 0.001%.
And everyone,
all the options just go down the shitter.
Which would be great because, what I feel like what's happening, like just for what's happening in that area is Nvidia is end up being like a proxy for AI. Whether or not AI is profitable, whether AI is like the new frontier, and that's weighing on Google, that's weighing on Microsoft, that's weighing on the entire semiconductor,
right.
the whole sector. All of those stocks are dependent upon this moment. And you have Satya Nadella out there from Microsoft saying that AI might not be as profitable as we say it is already. It's still, there's a future to it. He's kind of hedging his bets in lots of ways. Data centers are reliant upon this. We've been betting a lot in the data centers and the hyperscalers, saying this is going to be the future. Are they going to be as needed?
Right.
We see Apple actually, maintaining itself because they didn't buy into the data center thing. It's a really weird market right now, and it's all dependent upon one call and one person saying that call. I think it's fascinating.
It all comes down to tomorrow for sure. And I think that you have, a lot of the options, they're not as immediate. So the biggest money options, of course, maybe you have some that are weekly, some that are like expire in a week or 2 weeks. But people have been waiting for this moment. They've been setting up this options play since Q3 2024.
Yeah.
Looking ahead and hoping that the whole market would be much higher. We are also seeing consolidation amongst Mag 5, Mag 7 stocks. So Google, it's the market is really, if I could be honest, I feel like the market is way too consolidated amongst these stocks.
Well,
Nvidia being one of the biggest of
look,
that.
that's the one's been making the most money, like those big 7 stocks, and Nvidia
Yeah.
being the key in the middle of it. Everybody's seeing this as like the future of business. This technology play is .com of the early 2000s. We're really in this spot. And what's crazy to me is how it's dragging down other areas that are ancillary to it, like Bitcoin.
Well, I think
Bitcoin totally
right,
taking a dive.
Right.
Because of
And
this.
I think what you're seeing is the effect of what happens when we take this entire stock market, this giant ecosystem, and we make it so imbalanced in terms of market cap and money exposure that it's only really 5 stocks.
Yeah,
it's like there's 40,000 stocks, but it really only comes down to 5 stocks. And if they go up, everyone goes up. If they go down, everyone goes down. Like,
which we'll talk about some
that
stocks
can't
that we like that are not in that pool. That's a teaser to keep you guys sticking around for the rest of the podcast.
Oh, yeah.
But I mean, that's there are. You're right. Like everybody's concentrated on these few. And one of the trades that I made this week that has turned out to be relatively profitable is doing what I don't normally do, which is shorting a stock. But I buy it. I'm buying ETF or power shares that
make sure you guys get him Big Money Ben. Make sure you give him shit for shorting you. He shorted your precious stock.
I shorted Bitcoin and I shorted Tesla. As I'm watching this world happen and I'm seeing all these ancillary things and all the frothiness starting to go down, Tesla, I believe, has been overbought for a very long time. They don't have the revenue to justify their stock price. People are pulling money off the table. Bitcoin. Sure. You and I have talked about this a lot, worthy of an entire episode. I'm not a Bitcoin person. I don't understand it. I don't see the value. Same thing, very speculative. I'm seeing people pull money off the table as things get really hairy. And when these things happen, like I bought into this, and then today I'm up 8% on both of them. Mm-hmm. When the market's completely crashing, the only shelter is betting against the market.
Well, I think you bring up a good point. I think that anyone who's out there who's trading or starting to trade or setting up or even just managing your own hobby accounts. And I say that with a pause, and I say hobby accounts because please God, don't be managing your IRA or your retirement account. This is not whatever we talk about on this podcast, dude, this is not for your retirement. This is active trading, hobby stuff. Like Celsius trades like this is not for retirement, man. Like this is for side stuff.
Get your retirement account in order.
Yeah.
And
then
play with 10% of it. Play with 15% of that money.
Set up a separate account
and play with do these things. But boy, make sure the most boring stocks, the most boring index funds. Yeah. That's what you should be in with the majority of your money.
So that's our caveat right there. Now, I will say that as far as what we're talking about, I agree with you, Ben, and I think that everybody who is doing this, who's playing the market, you should always have 1 or 2 stocks short.
Yeah.
Because it really takes the sting out of a day like today and a day like yesterday and a day like before. You can always close those positions if everything starts ripping. But if you don't have anything on the short side, and that might just be as simple as buying long dated, put options. But like, God, man, you got to hedge just a little bit. It can pay off. And now I don't suggest people only go short. And as a matter of theory, I don't love shorting. I don't like rooting for people to fail.
No.
And I don't like shorting for no reason. But if you accept that the market has an ebb and a flow, like the ocean has tides. Yeah. Tides come in, the tides go. You just got to go with the flow, man. You got to be zen about it. And I think you made a very zen trade. You shorted 2 things that were frothed out.
And I shorted from the perspective, if you don't want it, like I short buying long into pro shares that are shorting their positions.
Right.
Like I'm not borrowing the stock to then pay it back. I'm literally buying into it.
Right. You're not mechanically shorting.
No, I'm not mechanically. And there are options out there now which are great that you can get in and actually buy long in the same way that you normally would buy any stock.
Yeah.
If you want to bet against something.
God, I
don't do it a lot.
I really wanted to buy. So if you don't know, there are leveraged short and long ETFs.
Oh.
TSLQ is one of the leveraged short Tesla funds. I really wanted to buy it at 350, and I was like, wait till it goes up to 400 before I buy it. And I should have bought it.
Can we be controversial for a second and lose half of our listeners in one fell swoop?
Yeah,
we've talked about this before. I I've on a very positive note. I'll be very positive for a second. I've been playing with Grok 3, X's, Twitter's AI, and man, I'm impressed. I really am. Like, some people are giving a lot of crap. I'm super impressed with it. I like it as a competitor to ChatGPT. I love the fact that it's mining data from Twitter in real time to be able to provide answers on top of looking across the web.
What could go wrong?
What could go wrong? But it's using it as a source of information, which I think Twitter X's power has always been its real-time nature. So if I want to find out what's happening right now, it's culling a lot of data. So I was playing around with it. It's fascinating. It's great to talk about stocks, great to talk about the environment, the business environment, et cetera. I asked it a very simple question about Elon Musk and Tesla. And I got back a fascinating answer from his own AI saying, yes, he does have a long history of overpromising and underdelivering. You shouldn't expect the robotaxis to come out this year. You shouldn't expect the cheaper Tesla to come out this year. And on top of that, all the regulatory hurdles that he has to overcome. And I'm watching that stock going, well, everybody's betting on these things coming out in the next couple of quarters, and this is going to be the game changer for Tesla. I'm going to short the stock. I shorted the stock because Elon's AI
told
me to.
Yeah. Well, yeah, that's a loophole right there. You blindsided him a little bit.
Elon told me to do it. It's a fascinating thing, but look, if you're into the stock, if you like the meme, if you really believe in the future of it, look, more power to you. I am trading off of fundamentals, and as I see things get really frothy, these things that just trade up PE multiples that are absurd,
right?
Very easy for me to bet against.
Well, yeah, I agree. I shorted Palantir to great profit.
Oh my gosh, and Palantir, talk about a drop.
Yeah, I cut out of that way too soon. God,
it's still falling.
I know, and it should. It deserves to fall, not because I feel any type of way about it, but because it was at 650 on the multiple or whatever, on the PE, and it's like that's not sustainable. And the media turned against it, like we talked about last time. Yeah. Even they could see it. Tesla scares me though, because I've been trading long enough to see it as a sure shot short, and to see Elon illegally continue to use options and the gamma squeeze sort of strategy that they use with the options to keep pushing the share price higher and higher. Does that mean that it can't ever fall? No. And it is a house of cards. Absolutely. Because ultimately it is a business. But I think it wasn't until actual legitimate competition entered his space that we were given an alternative to not just short Tesla, but to actually invest in Rivian, to invest in Rocket Lab, to invest in the competition that is
What's the Chinese car? What's the Chinese EV?
BYD. Which Warren Buffett made a ton of money on. I mean, it's one thing to just short the stock, and that can be fine if you want to bet against it. But I would always encourage people to look at the market and maybe come up with a multi-leg strategy. Don't just short it. What's the thesis here? And who's taking their money? And if the thesis is Tesla's losing market share to Rivian, then you shouldn't just short Tesla. You should also long Rivian.
That's the arbitrage.
Yeah.
But I mean, look, we've talked about this, but stocks like Tesla, investment strategies like Bitcoin, they don't make sense. You can't look at the fundamentals and say that they're going to go up or down. Look, Elon posted
I just bought so much.
No, but like you can't like I could lose this trade not based off fundamentals, but because people have a very almost religious belief in both the cryptocurrencies and in Elon's capabilities. I'm not going to be able to compete with that. All I can do is try to win a little bit of money as some people are taking money off the table. Will it be a zero stock one day? I think so. Will it be $1,000 stock one day? Maybe. Yeah. They're just as probable, not because of the business fundamentals, but because of people's belief in it.
Well, you bring up a great point, and that's where options come in for me, at least, is that options perpetually give me a way to make money in the market.
Yeah.
Because some things are too frothy and some things are maybe undervalued. But if you were to just look at longing everything, you would always be at a point where everything looks too expensive.
It's like,
how do I make money with Amazon already being $240 a share.
Yeah.
Well, you can make money if you are buying $260 call options that expire at the end of the year or whatever. Like, there are ways to add multiples, whether it's through leveraged ETFs or other ways. Like, there's ways to continue to make money on a market that's too frothy or undervalued or oversold or whatever it may be. You know, I have my captain's license. People may not know this about Just Brewski. I'm a captain.
He is a captain.
I'm a captain.
I've actually been on the boat.
It's been on the boat.
I have.
And one of the things that I always think about in the market and in the financial markets that I learned from being a captain is, you know, those container ships, those big freight ships.
Oh yeah.
If you had to guess, if you were on a container ship and you had to stop, you know, someone radioed up to you, stop the ship.
Something right in front of you.
Yeah. How long would it take you to stop? How much distance?
Oh, how much distance? From
cruising speed.
Oh, I don't know.
To stop, like, to where you're not going to hit whatever you're going to hit.
You're whatever you tell me is going to be way too much.
7 miles.
How long does that take in time?
I don't know. It just there's a time efficient, but
probably what, like 20 minutes.
Well, you're
that's a long time.
23
7 miles.
7 miles.
7
You're going
miles.
to travel 7 miles while you're trying to stop the momentum. And I think about that. I remind myself of that when I look at the market on days like yesterday and today, and I go, this is but an orange madman doing, moving his hands back. You know when little kids are steering a pirate ship at a park and they grab the thing and they're all, I'm turning, like, that's what we have. We have someone just turning the wheel like they're at Chuck E. Cheese on like a dune buggy. But it's not going to change the momentum. It's just causing temporary blips. To really change the momentum of this thing, it's going to take 7 miles of either getting your ass handed to you or 7 miles of ripping. And I don't think we're there in either place. So in the meantime, you just got to kind of like work around the navigation. During the pandemic, there were days, early days of the pandemic, we were breaker down. That was terrifying. I don't think anyone who had traded in the market had witnessed breaker down days. So just stop the market, shut it down
repeatedly.
We cannot do this anymore. That's when you're at your 7 mile mark right there. Like they had been telling them, hey, this is going to happen. You've hit it. That's the all systems, all emergency, break all glass. So 3 red days, I'm not too concerned. Did I lose many tens and hundreds of thousands of dollars?
But you've also made a lot of money on the other side. You're bouncing it out.
You get a little bit, you get objective at a certain point. But I guess my point is with the ship analogy is that, like, I have to remind myself that even though days like today feel like a panic day, it is but merely just a small diversion of our general navigation, which is up. When you zoom out and you look at the S&P, you zoom out, you look at everything.
It's going up.
We're going up and it's going to take 7 miles of shit to turn that bad boy.
But even when you look at the averages out, like I owned a ton of index funds during when the pandemic hit, and those triggers, those breakers were hitting. You look at it, you zoom out, that did drop precipitously. I had a ton, and in that moment, boy, that was heartache and pain.
Yeah,
but
felt like the end of the world.
It did. But now when I zoom out at it, I'm like, oh, it just bounced. I wish I would have bought a ton when I got to that bottom. Like it's evened itself out and then ripped from there. So these moments, regardless, like to the retirement portfolio conversation earlier, Mike, don't panic.
Well, right.
Keep
and it's know that the ship still has 6 more miles before it really is.
Keep going.
Keep going, and then
ship's gonna keep going.
We'll turn the throttle back on. This is just but a minor slowdown or a minor. It's when the ship stops or the ship changes course, you'll know. We'll all know. I was overreactive. I was a younger trader. That was a while ago now. I knew a lot less than I do now. And during that period of time, I was a reactive trader.
Yeah.
And that was not the right strategy. Like I reacted to every single thing that happened. And day one, I'm buying Campbell soup stocks. I was buying 3M, trying to get ahead of the masks. I was buying. Did I need to do all that? No, because this ship the direction it's going, all the stocks are on the ship.
Yep.
Ultimately, we're all heading for the same direction.
Listen, if
so
you
trying to swap one stock for another stock, like whatever, you're arbitraging yourself at that point.
You would have just bought an index fund at the bottom of the trough of 2020. Oh my gosh, you'd be in a great way.
Been easy, man.
You would have been in a fantastic way.
It's being so reactive on that. You just got to keep perspective. And on a day like today, like this is down 10%, but that's only down 8%. I should sell this and I should buy that and like whatever. Like, no, just chill. Just sit back.
To that point, man, what are you looking at right now?
Well, like oh God. This is embarrassing.
Tell me what you're looking at.
It's an embarrassing trade, man.
I want to hear it. I don't think we've talked about this. I want to hear it.
Okay, so for those of you who are not familiar, and we talked about this last episode, but I'll reiterate just a smidge. I entered the stock market initially right after the .com bubble.
Yeah.
So I didn't live through that, but I got in right after that. Now, there was one person who in some ways epitomized the .com bubble. And his name was Michael Saylor, and he ran a company called Microstrategy. And their precipitous drop during the .com bubble is one of the big known, well-known drops of that thing. I didn't live through that. He now has a company, same company, and all they do is hoard Bitcoin. That is the business model for MicroStrategy.
This is like my nightmare.
I know you love this, right?
What's the pro shares on this short on this one?
I'm
gonna go the opposite side. This is gonna be like game.
Yeah, you already are.
This is like betting on the Super Bowl. Like you're betting on the Chiefs, I'm betting on the Eagles, or vice versa. This is what I'm like. I feel like I should open a trade up just to do this.
So Saylor,
I'm not going to.
Saylor has his company, and all they do, the company doesn't do anything. The company owns Bitcoin, and they keep diluting their shares to buy more Bitcoin. Now, to their credit, they have almost 500,000 Bitcoin in their possession on their balance sheet.
Okay.
It's a lot. It's a lot of Bitcoin.
It's a lot of Bitcoin.
At $80,000 or $90,000 a Bitcoin, that's a lot of Bitcoin.
Yeah.
Their average cost is like $65,000 per coin.
Okay.
Now,
they're up 50%.
Yeah, but if it drops down, no bueno. If it goes up, good times. It is a very volatile. If you want to look at Bitcoin as being like the tulip. Thing, that would be the tulip. That would be the florist. There is
He's bought all the tulips.
He's got all the tulips. There is nary a big. I mean, there really isn't. There is nothing on Wall Street that has more cryptocurrency holdings, Bitcoin via Bitcoin, than MicroStrategy. So today, Bitcoin dropped precipitously like it did yesterday. It's crashing. And in some ways, I think with all of these...
Is it still crashing right now? I'm sure.
No, it turned around a little bit, at least before we started recording. But, it's so funny because the old school Bitcoin guys, the guys I knew back in the day who were trying to convince me to buy it,
oh yeah,
they also
1,000.
Yeah, they also had a copy of the Anarchist Cookbook under their mattress. And,
yes. This is going to be the currency of the future. This is how we're going to listen when society collapses. This is how we're going to exchange currency.
You remember do you remember there were like TV sitcoms, drama sitcoms. I can't remember which one. It was like NCIS or something, but like the data girl was always like a goth chick.
Oh yeah, NCIS, man. Yeah, NCIS. Absolutely. She knows all about Bitcoin.
Oh yeah. She's a Bitcoin maxi. That was what Bitcoin was back then, right?
Oh,
it was
totally.
Anarchy, it was anti-government, it was decentralized finance.
Yes.
And I look back on that now and I'm like, God, actually it's kind of rad. Like I didn't get it then. I didn't buy into it then. And that's probably when I should have bought it. It would have been most profitable. But now you've got all of these giant financial institutions with ETFs, buying, Bitcoin ETFs and BlackRock and all this. Like, it's not that anymore. It's not the girl from NCIS anymore.
Oh no. Now it's a quant.
It's a quant guy. Bitcoin has just become another financial instrument that's very vanilla in some ways. It's a canary in the coal mine when the market's going to go down. It tracks when the market goes up. It does not operate independently. Bitcoin. Now, the shit coins, yeah, they're on their own.
Yeah.
But Bitcoin is very much just gold at this point in some ways. When it dropped today, I got so much to say about I know
that,
you do.
I know. I'm gonna let you. I'll hear you.
I'm just gonna say, man. I'm gonna tell you the trade, and then I'm gonna shut up.
No. Hey, look, this isn't based on fundamentals. This is based on the trade.
I had a little bit of envy that I never bought into MicroStrategy because I just think it's so funny that this dude, Michael Saylor, he basically resurrected himself after being fined to death, like criminal charges, the whole thing.
Yeah.
Resurrected the company, came back and just started buying Bitcoin when it was like NCIS girl.
Yeah.
And now it's
has a company.
And now it's in the S&P.
And
it's a real company.
Do you remember when Yahoo was like one of the largest investors in Alibaba?
Yeah.
And so like part of their stock was just exclusively an Alibaba holdings. That was the only value to it. Like the .com was bursting again in the media side, but they were buoyed. This is the same thing. MicroStrategy is just a container for Bitcoin.
It's a hollow container. It does nothing except for HODL, HODL, as it would say. So I always looked at it and I was like, man, it would be so funny to have a fair amount of that in my portfolio.
Yeah.
But I'm not going to buy it for $300 a share or whatever it is. But then I saw that there's a leverage 2x MicroStrategy ETF, and I'm like, okay, now we're talking, because it's like options. I'm like, now I can make a little money just on the jump. And oh boy, that thing crapped today. So everything was dumping today, and that was down 27%. And it was getting real close to Brewski's 30.
Oh.
And you know, I can't not buy it down 30%. So I looked at what I had, and I went, what can I sell? Okay. It's a down day. So that's a hard thing. It's like, what do I liquidate?
What are you going to lose money on?
Everything's red.
Yeah.
And I rode SoFi up pretty hard.
You did.
So I have,
you're a believer.
In one of my portfolios, I had 5,000 shares of SoFi. And so I liquidated 1,000 shares of SoFi at 1402. So $14,020, whatever that is.
He still believes in you, Noto, if you're listening.
Yeah, I still have 4,000 shares in that particular portfolio. But I put that $14,000 into MSTU, which is the leveraged 2X Michael Saylor blaster. And I'm not a believer. I don't know. It just hit it was hitting almost 30%, man. I was like, I'm going to give it a go. Drastic times call for drastic measures.
Jesus. I mean, I feel so boring over here. Like it's
look, it's only 14K.
Yeah, but still, I mean, but I'm sorry that I'm betting against you in a different trade with Bitcoin.
Yeah.
We'll see who nets out if history is any gauge with this stuff.
So now this is going to be good. So Ben is short right now. Ben is short Bitcoin, and I'm basically leveraged long Bitcoin through Michael Saylor's Burger King. So
we're going to see next week. This time next week, we're
going to see, because the trades were made today.
Yeah.
Well, I made my trade today.
I made my trade yesterday. Yeah.
So we're fresh on
but
this.
I made it late yesterday, and it pretty much did nothing. And today it ripped.
Yeah.
So we're pretty much even.
Yeah, I think
next week we can see who won and who lost.
We'll see.
Oh.
Yeah, what's risky, of course, if you're straight short Bitcoin, you're just tied to the value of the
100%
of the Bitcoin.
Yep. You're leveraged.
I'm leveraged, and I'm subjected to, like, does Michael Saylor decide to dilute shares so that he can buy more Bitcoin? Like, because that's been his perpetual money machine. You issue shares, you sell them at the market, and then you use the profits to buy more Bitcoin, which pushes up the price of Bitcoin, which pushes up the value of your company.
Jesus,
it's infinite money glitch.
But I want to write it. I promise you guys, this isn't all a scam. This is all a real legit thing.
So Man, come on, man. Give me like 1 week. Give me like 1 week in this stupid trade.
No,
man.
look, I'm not saying that you don't bet on the scam. Like, he knows what he's doing. Like, people are buying into it. Like, look, you're going to make money off this, not because of fundamentals. You're going to make money off this because this guy knows his financial engineering.
You know what for me, this trade is actually bigger than that. I think, and again, now that I'm saying it out loud, this also seems so stupid.
You're going to listen back to this and just really question yourself.
Damn it. Trump administration promised these Bitcoin people big things.
Yeah.
And since he's sworn in, it has been, they've just been kicked in the nuts over and over again.
You mean the Melania coin isn't going to take off? That thing dropped. That dropped down to like pennies.
He really, and I don't say this as a crypto guy. I say this as someone who watches the markets. But boy, if I can be honest, if I can be objective, Trump really kicked you crypto guys in the nuts, man. Like really, really hard. He did you guys real good with that Trump coin and that Melania coin, and it stopped all the momentum that Bitcoin had. And if I was Michael Saylor, I'd be looking at Trump, be like, I donated all this money to you guys, and this is what we get. So he owes them, and
that's your bet. Your bet is he owes you.
My bet is that he's going to come through on his promise.
But look, I mean,
what have I done?
But at the same time, you and I talked about this last week. I'm making bets currently that Trump won't be able to make this TikTok deal go through.
Right.
And so I'm betting on the same stuff. Like I'm betting on you're betting on that Trump will pay a favor. I'm betting on that he can't fulfill his obligations to the TikTok users, I guess, that he's made a promise to, that this thing will continue. Look, we're all making, this falls into that macro idea of like, we're making educated gambles off of things that we think are going to happen, be it tariffs, be it regulations, be it giving favors and gifts to the Bitcoin crowd because they helped get him elected, or to China and TikTok for the same reason.
Yeah, and what's scary about that is that I think in the back of my mind, I'm sure in the back of your mind, if I had to really think about it late at night, what worries me is that maybe the ship isn't going to continue the course. Like, I'm an optimist. I like to fancy myself an optimist, and it's paid off in the long run in the stock market. I made some huge mistakes because my optimism sometimes trumps my ability to be objective or skeptical when need be of a business. And we can talk about that on later episodes of Money I've Lost. But I think the only existential threat to you and me right now is that maybe things already have turned. Maybe the ship is already veering off course in a way that we're looking at the horizon so hard that we're not seeing that we're moving away from that.
It could be. I mean, God, look, people are gambling against that, and people are gambling for that right now. Like there's really no telling. And I think like tomorrow night's Nvidia call will be the first of many things that are going to either give us pause on participating in the market in a really aggressive way, or they're going to give us a complete reason to be jumping head first. Because as we've seen with the markets in the past, regardless of administrations, regardless of regulations, regardless of whatever rules are put through, man, Wall Street finds a way. Yeah. Companies find a way, and there's always something to gamble on, no matter what it is, that's going to make it. Tariffs are going to hit, and maybe that's going to take a hit on automakers because they're going to have to be paying more for steel. But at the same time, we're going to have local production places that are going to end up skyrocketing. There's always an opportunity. Well, everything just tends to shift around. And as you and I have seen over the past couple months, one of the things that we've watched the market do is really overreact to the threats of tariffs and the threats of news. And it becomes a remarkable opportunity for you to go, oh, I don't think that's going to happen. He's just saying that right now, and we're going to be able to do it, just like saying, I'm going to save TikTok. I don't think you can. I'm betting that everybody who is thinking he's going to do that is wrong.
Well, the overreaction part that you're talking about, like, it happens with news, but what's really scary is how the market reacts to earnings.
Yeah.
And it's become a lot less predictable.
Oh, I'm so happy. Listen, HIMS.
There you go.
HIMS. We talked about HIMS last week, and then they come out of this earnings. That's one of the things that I wanted to talk about today was HIMS. This is a remarkable look. I don't care. Read any analyst that you want. Go and read that Go read the transcript of the earnings.
Right.
Look at the earnings from just a financial perspective. Run it through ChatGPT or Grok and ask it why the stock fell. It'll explode. There's no reason for it to have an 18 to 20% drop after the numbers they posted, except for the guidance that said the Ozempic, the generic Ozempic that they're compounding might not be necessary anymore, might be as profitable as it once was. But as you and I know, there are so many other reasons for HIMSS to exist, and they've done a remarkable job of grabbing market share, not just in that space, but across the board, be it ED, be it hair loss, be it whatever. I think they're a really well-run company. They're marketing themselves really well. The PE ratio is a little hot still, but man, 20% drop. I don't think it's necessary.
Yeah, and I that is, to me, that has nothing to do with HIMSS. That has to do with the market.
Yeah.
And when you see, and that's not the only one. I mean, in this last earnings cycle, we've seen many stocks with good earnings get absolutely destroyed in after hours. And it creates a hole for them that it's very hard for them to come out of.
But you know what I've seen though?
What's that?
But what I've seen from all of these, we saw it happen to Google recently. We saw it with the HIMSS. They're not bouncing back as fast as they once did. I thought HIMSS would bounce back day one.
Yeah, there's no buyers.
I'm still waiting for my moment. I'm waiting to see a little bit of a glimmer of hope in that stock before I jump into it, because I want to jump into it.
Right.
There's no double bounce yet. There's not a lot of glimmer of hope.
There's no buyers. And so what happens tomorrow? Whether it's up or down, to me that's only one small piece of the puzzle. The real telltale sign is the ship still on course and just being a little squirrely, is if it drops, do people step in and defend it and buy it?
Yeah.
Because they are willing to continue to stay in the market. Or does it have a great earnings and still sell off because people are like,
take their profits?
You know what? I get the hell out of here.
I've tapped out. I've made a lot of money on this.
Yes. That's what's really concerning. So to me, it's not about whether whether their earnings are good or bad. It's about how we react as a whole, as a financial system, and whether or not people are willing to step in. And we got to see those green candles after earnings, after hours. We have to see it start to pull the market back up. If it starts selling off on good earnings or bad earnings, all confidence is lost.
Well,
and then you got to really reassess, like, okay, how bad is this going to get? You know, like where are we going here?
To that point, one that I've got my eyes on that I'm waiting. I can't remember when the earnings is. It's upcoming. The Nike earnings.
Yeah,
you and I were texting about this. I think this is a fantastic turnaround company right now. Watching what they're doing from the marketing. The new CEO is fantastic. So many of you that are listening know this story, but for those that don't, old CEO came in, made it almost a direct-to-consumer company, really blew up the marketing that they did, really distanced themselves from like the sports and the athletes and put it to more like hey, I'm just talking to you and trying to sell you shoes, and really devalued that brand. New CEO comes in, has been in for like 6 months now. We saw this great Super Bowl commercial. They are going back to what Nike is. I love his mantra of let's let Nike be Nike, let Nike do what Nike does. It's a storied brand, and it's been completely hammered down into the 80s or low 90s because of this, because all Hoka and all the other competitors out there that started eating their share. I love this guy's story. I love what they're doing with this company. I think they're on the start of a very big turnaround, but this earnings coming up scares the living daylights out of me, because I think they're still living off what they've been doing for the past year. It's all going to be about the guidance. And so to me, on this upcoming call, this is going to be a great telltale of forward-looking guidance, talking about what they're doing from an endorsement perspective and what their like marketing slogans are and how they're making this, how they're trying to make the company a turnaround. Is that enough to make the company shoot up after earnings, or are people looking straight at revenue? It's going to be a real interesting moment.
See, what scares me about Nike is consumer sentiment.
Yeah.
And now we're talking back about the ship again, because Nike is just but one container on this container ship. And if the whole container ship decides to fucking turn and crash into Catalina, There's nothing
No.
Nike and Starbucks
No.
and Target and
You are betting against the macro possibility that consumer sentiment is going to cause everybody to tighten their wallets.
Yeah.
For
And-
a stock like Nike, for me, you're betting on your high school kids and your young adults that want to be an athlete.
So like I think the savvy analysts who look at this sector, they're not just looking at the brands, they're looking at the brand stories and all that, of course, but they're also looking at consumer sentiment.
Yeah.
And additionally, I would be looking at like how many people are laying away, like what do they call it? Like the household credit, like things like that.
Yeah.
Then if we are not able to bring down interest rates, how does that affect people's ability to carry a balance on their credit cards?
Yep.
Are they likely to buy a new iPhone or a new pair of Nikes or go to Target and do school shopping and this and that? That going into the summertime is going to affect United Airlines. It's going to affect Marriott. It's going to affect all of these. It's going to affect TripAdvisor. All these publicly traded companies that depend on strong consumer sentiment where people feel confident in putting money on their credit cards, confident in spending money because they have a job. They don't work as a park ranger or as a government employee. I mean, at what point can this ship take so many hits on its course that all that stuff compounds? And so that's what worries me about Nike. I agree with you. I think it's a great story. Starbucks has a new CEO. I think there's a great growth story to be said there. My kids are addicted to Starbucks.
Oh yeah.
All these consumer sort of like retail stocks, they're great, man. They're great.
I think they're super interesting, and I think like Nike. What I would be betting on is, can they take market share, even if market starts to decrease because of consumer sentiment? Can they take back the share that they lost over the past 5 years, therefore offsetting any loss in consumer confidence by raising their share?
What I'm hearing from you is you want them to pull a Celsius and buy Hoka.
No, I
That
don't.
would be the equivalent.
I want them just to overcome them.
Right.
I just want them to overcome that. Please don't go buy.
But they could buy Hoka, and
No,
you could
please.
text me and be like, "God damn it, they bought Hoka." And it rips.
They buy Converse, now they're buying Hoka.
Yeah.
And the other one that we were talking about was Kohls, which fits in that exact same area. One that I've been watching.
Did you pay Kohls cash for it?
I didn't pay Kohls cash, but you just about can because the stock's so cheap. It's pretty bad.
Yeah.
But like it's the same thing. It's the same consumer sentiment, but does it fit in that area if we get into a recession-ish mindset?
Yeah.
Do places like Kohls, do places like more discount stores, do you see more going to that, or does it go all the way to Walmart? And Kohls is an interesting one that's been just hammered to death because they've had bad earnings after bad earnings after bad earnings. The short interest is through the roof.
Yeah.
But what's fascinating about it is it has a 16% dividend yield. It's remarkable.
Yeah, because they can't convince anyone to buy their stock.
No, so they're just giving away the money.
they're giving away
Like you're
Kohls
making
cash.
your money back every 5 years. It's a wild thing. So same thing. Consumer sentiment stock. I'm keeping my eye on it because I think it has so much short interest that's buoying it down, that's keeping it down. That there's an opportunity like these other shorts that have been happening across the board that just completely get squeezed.
they're all interrelated. Kohls. What happens with Nike, so goes Kohls. What happens with Levi's, so goes Kohls.
Yeah. Also
publicly traded. And Levi's was a darling of the stock market for a little while, and now I don't hear anyone talking about it because it's hard to look at something like that and get excited because you see how unexcited the people around you who buy things are.
Yeah.
People are just generally kind of pissy about buying anything right now. They're upset at eggs. They're upset at the price of the Nikes, or Lululemon is not the darling that it once was, or like whatever, Elf Beauty got hammered recently.
Yeah.
So I don't know. I like the sector, but I think with the turmoil that we have going in where it's all of those stocks, they are like viscerally related to like the people of America. You know what I mean? Like the day-to-day pocketbook of America.
I love that you're worried about this, but you're not worried about Bitcoin. I'm just kidding.
You're absolutely right. You're right. I would be more
You're more worried about consumer sentiment than cryptocurrency.
Absolutely.
Isn't that wild?
I would put more.
That's where we're at right now.
I just put $16K into crypto and wouldn't touch Kohls with a 10-foot pole. And the reason is because
this is where I love this, because this is where you and I are so different in our investment philosophies. But it's great because we'll probably both end up making money. We'll get to the same place. We'll get there through different paths.
Yeah, we're both at the top of the river, and we're just trying to figure out which chute is going to get us down fast enough.
I'm going to go down the swirly whirly one.
Yeah, exactly. Look, the thing that I like about Bitcoin right now and in this moment is that it's international.
Yeah.
It's not necessarily. It is tied to America in some ways, but way less than Kohls.
Yeah.
It is. It can be used to fund terrorism. And I think that's going to be on the rise. I really think we've got a little wave of terrorism coming.
Oh my God. This optimism is quickly waning.
It's I am agnostic when it comes to the market, but I will say is Brewski's rule number 48. I
bet on the terrorists.
No, I will always put my money into things that I want to see benefit society. So I don't buy private prisons.
We've talked about that. We've talked about this. Yeah, absolutely. Like you and I both don't want to put money into RJ Reynolds. We don't want to put our money into like things that are harmful or bad for them.
No,
like,
and I don't.
We both have children. We want to make sure that we're investing in things that are good for them.
Absolutely. And I jest, but I do not believe that Bitcoin strictly falls into this sort of like terrorist network. Like I'm not one of those
to buy
guys.
Drugs.
You can buy. You buy child labor, or child prostitute, whatever. No, I'm joking, man. It really has no uses other than that.
No, but I think
no, I'm serious.
I'm with you. I'm agnostic to it. I think it's benign. Yeah. Like if it's going to go up, you're betting on it to go up because people have been pushing it up continuously. This administration seems to be focused on getting those people the rewards that they need. There is an enormous contingency of people who are consistently hawking this to try to get more people to buy it into like you've got if it's an Amway sale, it's got the best Amway salespeople of all time out there really making sure that they make money off of it. It's not a bad bet. I just don't like it because I don't like the fundamentals of it.
Well, and I don't like the people. That's my problem. But
oh my God, now we're both gonna we're gonna get some angry emails. But look, San Francisco's all over us.
Look,
right now.
I gotta another Brewski analogy. I grew up in a baseball card era.
Oh yeah.
And then later people grew up with Pokemon cards or whatever.
Yeah.
They're all stupid in their own way.
Yeah.
And they're all valuable in their own way.
Yeah.
And for some reason, Topps is not like the most valuable company in the world. Like they could have just
have Babe Ruth.
They could have made all the Babe. Yeah. It's me buying MicroStrategy is like me investing in
baseball cards.
Donruss.
But not like the stock, literally a box that you found at a garage
many
sale.
Boxes.
An unopened box
many
of Topps and Donruss, like
Donruss
82,
and
hoping that like there's Wade Boggs in here.
There's a couple of Garbage Pail Kids packs in here. And
those are valuable though.
They're valuable, but they're valuable and arbitrary. They're about as valuable as Bitcoin. You can't walk into a store and directly buy a Toyota with a Babe Ruth, rookie card.
No. You have to go through a transaction.
Yeah, you can figure out a way to capitalize upon the value of it at a certain point, get it frozen in time.
Yeah,
and then you show back up with the money that you got.
Yeah,
and I see it in that sort of benign collectible way.
Yeah.
NFTs they were supposed to be that, and they were not. Really, it turns out just one handful of coins is that, and that's Bitcoin and to a lesser extent Ethereum and coins that have utility, not meme coins, not shit coins, not meme stocks, things with utility, things that actually do things. I don't know.
I mean, look, El Salvador is running it's kind of running its economy on Bitcoin. I mean, there are some practical examples of it being utilized on like a Melania coin.
You know what? If I hit it big, this is the end of the episode. So if I hit it big on my MicroStrategy leverage thing,
what are you going to buy?
All the Melania.
Well, I think you can buy it for about $25.
I think I could probably buy the whole float.
Oh my God! Well, I hope that happens.
No, I'm not. You know what? I'm not even going to say that because I know we're joking, but people are going to hold me to that, and I'm not going to do it. I'll figure out what the next trade is. But for now, for this week,
we're like, look, Nvidia tomorrow. We'll see if we can't get a little emergency.
What are you saying? Like real quick, end of the episode. What's your call? Nvidia beat or miss?
I think Nvidia missed by a smidge.
Okay.
And I think it's going to be just a completely boring earnings call. My hope, maybe I'm just putting this out in the universe, is that it just makes everybody go, huh, and we can get back to normal. If I'm just scared that it's going to either shoot up a ton and it's going to make everybody frothy again,
Right.
and we're going to go right through this again in another quarter,
Right.
But also a huge decline would be just the worst.
Yeah.
So maybe I'm just putting it out in the universe. I'm hoping it's right in the middle. It's a slight miss with a
That'd be great.
It would be fantastic.
That'd be amazing.
What do you think?
You know, it's funny. I don't even know, man. I don't even know. And I also don't even know if it's become a proxy for everyone's sentiment at this point.
Yep.
You know, like I don't even know how much it has to do with anything.
Well, I don't even know if it's the beat. I think it's going to be the guidance also.
I mean, I don't know anyone who owns an Nvidia chip.
No. Oh, no. Right?
Where are they?
It's like Bitcoin. Where are they? Maybe Nvidia's like Bitcoin.
Wait a minute. All right.
Are we all buying nothing? Just air.
It's like the astronaut shooting the other astronaut, you know?
Oh, absolutely. I love it. Look at this. So, hey, listen, good chatting with you. We've made it through another
hour of this.
Another hour of
and thank you, listener, for sitting through another hour of us.
Listen, we hope you enjoyed. You can reach us both.
Yeah.
You can reach me at Make Money Ben.
Make Money Ben.
Both on X and on Stock Twits. Hit me up. Ask me questions.
Just_Brewski, BREWSKI. I had one glass of wine tonight because the market was so bad. And look at me, I can't even remember my name.
Give us a holler. I had none, and I was still punch drunk from this week.
We'll see you guys.
But listen, we'll see you guys next week. If not, we will try to also do a little. If we get some interesting news and want to do a little emergency pod, we'll probably try to drop a little bit. We might get something.
Yeah, if you don't hear from us, everything's fine. if you get an episode 3 on Friday,
yeah.
Oh boy,
it'll be a 2.5.
We're all chafed.
Yes, exactly. All right, y'all. Happy trading to you. Enjoy your week.
Peace.
The information provided in this podcast is for informational and entertainment purposes only and should not be considered financial, investment, tax, or legal advice. We are not licensed financial advisors, and our opinions expressed are our own. Investing involves risk, and you should conduct your research or consult a professional before making any financial decisions. This podcast may include discussions of stocks or investments that we personally own or have interest in, and we will disclose those positions when relevant. Any mentions of specific stocks, companies, or investment strategies is not a recommendation to buy or sell. Furthermore, this podcast does not guarantee the accuracy, completeness, or timeliness of any information presented. Markets fluctuate, and past performance is not indicative of future results. Listeners are responsible for their own investment decisions. By listening to this podcast, you acknowledge and agree we are not liable for any investment decisions you make based on the information provided. Always do your own due diligence and consult with professionals before making financial choices.